It's estimated that 8 out of 10 U.S. tax filers will receive a refund. That's 80% of the U.S. population. The average amount of those refunds seem to hover around $2,700 or so. So, on average, that says that at least 80% of the U.S. population will receive a tax refund of around $2,700. And that should be a good thing, right? Especially since the Federal Reserve reported that 35% of Americans don't have enough saved to cover a $400 emergency. Well, I disagree. Refunds suck. And in this video, I'm going to show you why. Let's go. What is going on, family? It's your favorite uncle, cousin, Tyrone Gregory, the self-employed tax guy, here to share with you my views on tax refunds. Now, I've been in the tax game for over 13 years now, and I've heard arguments from both sides when it comes to tax refunds. And I've just come to the conclusion that they suck, especially for business owners. Listen, I know this is something that you're not going to want to hear. And I know that I'm not going to give many views on this, but for those of you who are brave enough to watch it, I hope it changes your life in such a way that you will be financially free forever. So let's dive deep into this. Starting with an answer to an obvious question, what is a refund? A refund is defined as to pay back money or a repayment of a sum of money. In other words, it's your money given back to you. Now, that is interesting. I'm wondering if that's why they call it a refund in the first place, to avoid the true terminology repayment or payback money. Because if we were to start saying, hey, did you get your repayment or your payback money? We might begin to wonder, how did it get paid in the first place? The next question to answer is, how do we get a refund anyways? Well, technically, there are only 3 ways to get a refund. The first one is to pay more than you need to in taxes through withholding. The next one is to qualify to receive refundable credits. And if you don't know what a refundable credit is, I'll put a link to the video I did that breaks all of this down. And finally, through a combination of them both. Okay, so now let me explain why I don't like tax refunds. But before I do, let me share with you some of the arguments that I've had and heard in favor of tax refunds. Amazingly, I've heard every reason under the sun as to why refunds are good, and none of them are in favor of economic development and wealth accumulation for small businesses or individuals. But the main argument, which really is only one, is that refunds are a forced savings accounts. What the And the F word around here means federal. So that translates to what the federal. I would agree with that argument if the repayment was actually saved, especially since an estimated of 69% of Americans have less than $1,000 in savings and 39% of adults have no money in the bank whatsoever. And secondly, if you're going to force yourself to save some money, at least put it into an account that will generate some interest. Do you get interest on your refunds? No. Well, if they've held it for a couple of years, they will pay a little interest, but then they're going to turn around and make you pay tax on that interest that they paid you. Outside of that, there's never been no other argument or good reason that I've heard for a refund. So here are my reasons that they suck. The first is because they restrict your earnings potential. In an experimental video that I did, I showed people how they can get the biggest refund possible. But the catch was that you had to have a minimum of 3 children, which is perfectly fine, right? Like, that's not the issue. But you also could not have made more than $19,500. That is the problem. Next is because it messes with people's mind. Refunds cause people to think irrationally. I've actually had an argument with the client because they started off in a low-income situation with children and therefore they received a nice-sized refund. But then they got a good-paying job, and here's where it gets terrible. Due to the fact that they were now over the income requirement for a huge refund, their refund was smaller. You know what they told me? They said that they were going to consider quitting their job so that they can go back to getting a large refund, even though their current job was paying more than the refund and the prior income combined. This is a true story. Another story is when I had a client spend their rent money on some stuff thinking that they were going to get a huge refund, but ended up owing and then couldn't pay the rent, so they had to move. And then on top of all of that, people pay hundreds of extra dollars to get a refund advance loan because they can't wait 8 to 21 days. And what the is wrong with people? I could go on with the stories, but for sake of time, I'll stop right here. Another reason refunds sucks is because, in my opinion, they represent poverty. Remember the example that I just showed you? In order to get the biggest refund possible, a person would need to earn no more than $19,500. I want you to keep that number in mind while I show you this. This is what is known as the Federal Poverty Guideline. It is a chart created by the Department of Health and Human Services, and governmental agencies use it as a guide to determine who qualifies for certain programs and aid. And the way you read it is, if you are a 4-person household and your annual income is $19,500, then you are in the poverty zone. And that is especially true since the average cost of living in the U.S. on the low end is around $27,700 annually. And let's not confuse the Federal Poverty Guideline with the Federal Poverty Threshold created by the U.S. Census Bureau. The Federal Poverty Guideline is just that, a guideline. The government uses it to identify who they will give aid to. Whereas the Federal Poverty Threshold says if you're in this range, you poor. And even though the government says that they do not use either of them in determining who can qualify for refundable credits, those thresholds are eerily similar. And now for my business owners. It's very simple. Refunds suck because of what they represent. Consider this scenario. Let's say that you owed me $100, but you accidentally gave me $1,000. That means that you overpaid me by $900. But at the end of the year, once I finalize my books, hey, I realize I overpaid you and I give it back. You may feel like that's okay as long as I returned it. And as an individual, that's a kind-hearted way to feel. But as a business owner, it's a bad mistake. Why, you ask? Glad you did. You see, if, as a business owner, you let $900 go unaccounted for, that is a strong key indication that the business finances are not being managed properly, if at all. Yeah, you'll get the money back, but what if you needed that $900 at some point throughout the year? You see, as a serious business owner, you need every dime possible. Yes, you may have large sums in your accounts receivable, but until those invoices are actually paid, you have no actual cash flow. And just like our blood is the life source to our bodies, cash is the life source to our business. Therefore, we must be extremely diligent in how we manage it. Okay, so now that we know why refunds suck, let's go over some ways you can avoid getting a refund. Let's start with your withholding. If you have just a regular 9-to-5 job, the best way to avoid a refund is to be extremely efficient with your withholding. And the best way to do that is to look at your most recent tax return, look at your total tax liability. Then you take that number and divide it by the number of times you get paid in a year. And whatever the result is, that should be the amount that you have withheld on your paycheck each time you get paid. If that seems a little bit more complicated than you're willing to deal with, pay your tax professional or CPA to do it for you. Alternatively, I did do an entire video series some time ago, and I'll make sure that I put the link in the card above. And although that video is a little outdated and the forms have changed, the names and instructions are pretty much still the same, okay? And if you are a fan of the argument that states that a refund is a forced savings account, then by all means, set up your direct deposit in such a way that your excess funds actually go into a savings account. Meaning that most payroll companies have the option to allow you to have a specified amount go to a specified account. And that account can be an investment account, a retirement account, or your vacation account. Just don't give it to the IRS. The next way to avoid a refund is, in my opinion, the best way, and that is not to qualify for refundable credits. Remember, in order to qualify for refundable credits, you must make under a certain amount of money. So do the opposite. Make a crap ton of money. 'Tis better to owe taxes than to get a refund, said some famous philosopher. Me. Man, I promise you, I can't wait for the day my taxes says I owe $100,000. Do you know how much that means I made? Yeah, think about that. And for my business owners, the best way to avoid a refund is to invest in your books, meaning either hire a bookkeeper or keep your books yourself. The goal is to keep a close eye on the incomings and outgoings of your money. And there is plenty of DIY bookkeeping software out there for you to be efficient enough to manage your funds and avoid a refund. And there you have it, family. A few reasons why refunds suck and a few things you can do about it to change your financial future. As always, if you found value in this video, please hit the subscribe button, give it a thumbs up, and hit that bell icon to get alerted for more. And do me a favor, let me know in the comments if you still want a refund. I really want to know if you do, or even if you don't. I want to know why. But in either case, again, let me know. And until the next time, know that I love you, and I will see you in the next one.
Perfect.